You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Hi, welcome to our little get-together that we call Talking Real Money, where we get together and talk about this one really critical topic that doesn't get the right kind of discussion in this country. I don't think it rarely gets the right kind of discussion, because most of the people who talk about money out there are trying to tell you how to make more of it, more than you really can. They're trying to tempt you with greed or frighten you with fear, and there's no nice, middle-of-the-road, academically based, sensible approach to managing your money and investing your wealth for a better future. That's why we do what we do and have been doing what we do for a really long time. And our number is 855-935-TALK, 855-935-8255. I'm Don McDonald. That's Tom Cock. This is Talking Real Money. And
it's a little like politics, by the way.
We are not like politics at all.
It is.
No.
Because politics usually looks at the horse race, right? Usually who's ahead, who's behind, all that kind of thing. It rarely gets into the issues.
Okay,
because nobody really wants to hear about the issues.
That's elections, though. Really,
but that's kind of day to day too. Anyway, I won't get too deep into all this. So, because you'll start using the 25th Amendment on me here soon and have me out of here before dawn. So,
I can't get the cabinet together though. I don't know.
Well, they're in the kitchen because we do call them the kitchen cabinet. So
my
wife would be all in favor of my removal.
Yeah, the only cabinet members I can find are in the kitchen, and they're not talking.
Exactly. They're smarter than that.
855-935-TALK, 855-935-8255. Hey, I mentioned this in my podcast of yesterday, but I want to bring it up again because it happens all the time. I'm sure you run into this all the time. We have a hot year like we just had. Which, by the way, nobody expected. Come on.
Nope. Especially last March.
Yeah. Oh, well, even try last December. Remember the predictions for 2020? Did anybody predict for 2020
tepid.
Double-digit returns for equities?
No. No, because we had a great year in 2019.
Right. So nobody was expecting this. And then after the COVID pandemic, everybody was saying that, well, the economy's just going to tumble, the stock market's going to plunge. We all sold out. Well, not we. You all sold out. I didn't. And
nope. I sold bonds and bought stocks. Yes. Other than that, I did not sell out.
And now, in what I believe is probably wishful thinking, I keep hearing from people in my circle that they're confident that what we've just experienced in the market is nothing more than a bubble. And I think they're saying that because they got out of the stock market in March and forgot to get back in because they were sure it was just going to keep going down. And the stock market's too stupid because they're smarter than the stock market or something like that.
Yeah, no, I mean, there's a lot of bubble talk. And if you go to, that renowned website, which we think you should avoid, which is also doubles as a TV channel called CNBC or Market Watch, the term bubble comes up a lot, and people think I shouldn't invest because of a bubble. By the way, they also are heavily promoting all the things that really did well last year, which, you already know, right? Growth stocks, gold, Bitcoin, options trading, and then my favorite, SPACs, because there were a couple of SPACs that did well, so everybody thinks I got to be in those.
I've got a little dent in the wall. Do you have some of that?
Yeah, you got to start throwing.
I need to
throw that stuff on there. Exactly. So, I mean, people want to chase the returns of things that did well. And, of course, that is a very poor philosophy that results in underperformance and generally losses in ways you did not expect. I'll put it that way. Think back, for example, to 1999 when people, when tech went up. I think I saw the number today, like 80% in 1 year.
Oh, it's hot.
And everybody's like, just own tech. That's it. And then we had
2000.
A couple of years, boom, went away. So, I mean, this is a problem with the human brain. that we just feel safety in the things that did well recently. Recency bias. It feels better because we're part of the herd that's doing that. By the way, we mentioned this briefly, but the herd on this chart is fascinating to me. We got a chart that showed money that went into stocks and money that went into money market or bonds. And guess what? I mean, come last March, all the money poured into what? Oh, yeah, it went into money market or government bonds, right? It poured out of stocks into that, right? Just in time for stocks to take off and do really well. Guess when people started putting money back into stocks? Oh, last fall. So this should have, what's going on in the world and the market, we've said this before, has nothing to do with your portfolio. That's about you, not about them.
Yeah. And I just looked at I typed in CNBC bubble into Google, and there's like 15 stories within the past 4 days.
Oh, yeah.
Where they
bubble,
talk
bubble.
Al Arian, bubble. Tom Lee, bubble. 855-935-TALK is our number. We can talk bubbles or anything else with you.
Tom and Don are talking real money.
Retire Meet has gone both national and virtual. Join Tom and me along with a host of other retirement experts at Retire Meet America 2021. Reserve your place now at retiremeet.com, retiremeet.com.
For your real life and real future, Tom and Don are talking real money.
And we're here for you whenever you need a little help. We give dough on the show we call Talking Real Money. I'm Don, that's Tom. 855-935-TALK is our phone number. We have lines available for you. And you can also, we have so many ways for you to ask questions. You can also send them in on our website, Talking Real Money, just using the contact form. Don't email them, because if you email them, they don't go into the right folder and it's hard to find. Send them via the form, the contact form at talkingrealmoney.com, and we'll answer them on the podcast or the show.
You can hear the irritation in your voice there.
Well, every once in a while I get a question to my email address and it doesn't go in the right place. And when I go looking for questions, I get up in the morning like this. I finally got my email box cleared. Cleared. I had 100,000 messages in it.
I only have 2 left. Yeah, I only have 2 that are unopened.
And I cleared it. It was empty yesterday. Yesterday. And between my personal and my business accounts, I have 163 messages today.
That's ridiculous.
I'm really? Too much email. Please stop.
All right. Well, give us a question.
I'll give you a question, though. All right. This one came in. Oh, this one came in a couple of weeks ago, so I'm kind of behind on questions. Better get going.
All right.
Best Vanguard fund. You can sleep. You can do this one in your sleep. You could just close your eyes. You could get this one.
Getting closer to every moment. But yes.
Best Vanguard fund to invest for mildly aggressive growth.
What does that mean?
I'm going to read you the question. Would you wait? That was just the subject.
Oh, okay.
The question is, I've listened to your show for a while now, and I'm ready to test the waters of investing.
Good.
Get that toe going in. I am fine.
By the way, this is something that we overlook when we talk about the show. We always talk about if you have money, blah, blah, blah. The first thing is to save something. And to get your children to save something. You got to do that first.
Or you got nothing.
There's no point in the rest of the show. It's nothing there. So
I'm 5 years out from retirement. And I've got
now you're scaring me.
Yeah, and I've got 20,000 sitting in a money market at 0.6%. Yeah, when you factor in inflation, I'm losing money. Where do I need to look for? You're going to have to answer this the right way, nicely.
Oh, well then.
All right, nicely.
Is this a new year?
Yeah,
new year, but same great attitude. I can tell right now.
You're just going to say something smart. Not smart as in intelligent, smart as in dumb.
I already have the answer.
Where do I need to look for mildly aggressive growth? I appreciate your efforts regarding this question.
Yeah, and if you're just starting out investing and you know really very little about this, and thank you for listening to our show and our podcast, I guess.
Wow, that was nice.
Here's what I tell people. I do appreciate it. By the way, I will say I got a number of emails from a podcast that I did 10 days ago.
You did about your son.
It was very personal. Yeah, and thank you to all of you who reached out. It's very kind. But here's the thing. If you don't know anything about it, I tell this to people all the time. I just use the Vanguard Balanced Index Fund.
Wow.
It's 60% in stocks, 40% in bonds. You're going to get, 60% of the growth of stocks. You're going to keep your money, hopefully, when things go bad. And
the other thing
done pretty well for a long period of time.
Consider is just a target date fund.
Yeah, target, same deal. Yeah, that's true. Yeah, pick the time you're going to retire. I can't remember the age was 5 years from retirement.
So it'd be 2025 fund or the 2030 fund,
sure.
One of those.
Actually, that's better because then it adjusts for you're getting older.
2030.
But something simple, and I'd have to look at the cost difference between the balanced index fund and the target date fund, but I bet they're similar. And I bet they're similar in terms of asset allocation. I bet they're similar in terms of the number of stocks. I bet there's a similar management program. I'll bet you. You're going to put it up there on the screen, aren't you?
Now you've well, yeah. Let's see.
I think it's going to be something like that.
Balanced index is, let's make sure we use the Admiral shares. They have an expense ratio of, drumroll while it loads, 0.07%, 60-40 portfolio. Okay. And then the Vanguard target 2030, did we decide on?
Yeah, 2025.
All right, we'll use 2025. Let's use 2030. Target, retirement. Come on, give me to the gosh. See, I don't know the symbol, so I have to type the whole thing.
Apparently, this is a live program, ladies and gentlemen, in case you were wondering.
See, I told you to be nice, and again, you failed.
New year, same great attitude.
0.14%. So it's a higher expense ratio.
Yeah.
And a 60-40 portfolio.
Shocking, as I said. Either way, you'd be fine.
Either way it works. All right. Okay. You want another question? Oh, we got a call? Oh, we got a call. Jeremy, it's your turn.
Saved me.
Welcome to the show.
Hi, Jeremy.
Well,
Happy New Year.
Happy New Year's. I've got a question about the TSP.
TSP, Thrift Savings Plan.
Yes. So I just actually got hired last year, so I'm a brand new government employee. I've been trying to get into this. I'm not sure where I should actually invest my money into TSP. Right now, I'm in a life cycle fund, the 2045 life cycle fund, and I'm just wondering if I should just keep it there, or how should I distribute my money throughout the TSP?
Here's the thing. I think the Life Cycle 2045 fund, it would be sufficiently aggressive. How old are you?
I'm 41.
Yeah.
41.
About right.
Or, I mean, here's the thing. It'd be a small difference, but I think you get a little bit more small, you get a little more international if you instead use the portfolio that we have free of charge at 401411.com. 401411.com. You click on specific plans. It says Thrift Savings Plan. If you did the 80-20 there, you're 80% in stocks, 20% in bonds. It's going to expose more of your money to smaller companies, expose more of your money to international companies, because my guess is that life cycle fund is mostly large U.S. companies. It's going to have a little tiny sliver of all the rest of them. But either way would be fine. That's a good asset allocation for somebody who's planning on working for another 20 years.
Yeah, I don't think there's going to be a dramatic difference. The differences with the slightly higher small company bias is probably going to add 0.5% maybe over the next couple of decades. Yeah, 0.5%.
That's a lot.
0.5%
Yeah, 0.5%. Yeah, it adds up over 20 years.
It does add up, but it is going to mean more volatility, a little more scariness.
And more work.
And
more work. The life cycle fund, you just put it in there. They take care of all that.
And there's a lot to be said for less work when it comes to your money.
In general, there's a lot to be said for less. That's what I was thinking yesterday when I woke up at 4:45. There's a lot to be said for less work.
Yeah, you still got a couple of years. You have to stick this out.
Ugh,
I'm sorry. Thanks for the call, Jeremy. Appreciate it. 855-935-TALK is our phone number. 855-935-8255. The TSP plan, the nicest thing about the TSP, in my opinion, is the ridiculously low fees. The government is really fair about the fee structure of this program. They keep it as low as they possibly can. I mean, they're as lower than Vanguard, Fidelity. They really keep it down.
And they have a bond fund that has bonds in it that you and I cannot access. It's a terrific fund.
Very safe, too. Very, very safe fund. All right, we do have a line open for you. The show is about money.
Or two.
It's about your life. It's about how you are going to live it in the future. So give us a call, 855-935-TALK.
Tom and Don are talking real money.
Learn about estate planning, Medicare, Social Security, senior housing, investing for retirement, generating income in retirement, and protecting yourself from consumer scams, along with a special keynote duo, Paul Merriman and David Booth, the founder of Dimensional Fund Advisors. Reserve your free place now at retiremeet.com, retiremeet.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Our favorite thing to do on this program is not to talk. Well, we like talking because we're talk show hosts, but it's to answer your questions, which is really fun for us at 855-935-TALK until Tom gets testy. Really, otherwise...
Well, and frankly, we talk to each other every day. So, frankly, I've pretty much said everything to Don that I want to say. I don't got a whole lot left. I'm sorry.
So really, odds are this is the last show we're ever doing.
I feel bad in some ways saying
welcome
that,
to the final edition of Talking Real Money.
You've seen the sandwich I'm having for the game.
I have not. I haven't seen the sandwich.
It's got several meats in it. It's got cheese. It's all getting ready to melt.
For the Seahawks game that's coming up right after the show?
To melt in there. Yeah, right after the show. It starts at 2 o'clock. So.
Right after the show. Well, that works out perfectly for you.
Indeed it does. Indeed it does.
Too bad I don't have a team I care about.
Since my team's not playing.
Yeah, I was going to say, too bad I don't have a team I care about.
I know.
I'm not going to root for the stupid Chiefs.
Yeah,
exactly. We're AFC West people, but for the wrong teams. I have another question. Oh, wait, we got another call. Oh, darn it, we better get that one. 855-935-TALK's the number he called in on, and that's Steve. Steve, welcome to Talking Real Money.
Hi, how you doing?
Good. What's up?
Can you hear me?
Yeah.
Okay.
Yes.
I just retired December 31st last year, so I'm newly retired. I have a pension and Social Security coming in. I'm 66 years old. I'm totally debt-free on my home, and combined in my Roth IRA and my conventional IRA, I have about $850,000. I got $600,000 in my conventional, $250,000 in my IRA. I've been using the Brinker portfolio models for many years, and it's paid off pretty good. Now, what I'm thinking about, I listened to you talk earlier about the bubble. I've been thinking about taking my money off the table and then dollar cost averaging back into the market on a monthly or even quarterly basis.
What?
Just to preserve.
You're pulling our chain here, right? You're pulling.
He's doing it again. Are you getting testy again?
Yeah, are you in stock?
Well, he's worried about a bubble.
Out of your
He's worried about a bubble.
No.
Okay, I want to make sure I heard him. I thought he was pulling our chain.
Yes.
I am in mutual funds.
Okay. Wait.
Yeah,
okay.
I got it.
So you're using the Brinker. Wait. So you have it. Okay. You're using
this
Brinkers.
Is Bob Brinker to which we refer.
Oh, okay. So which portfolio are you using?
For my Roth, I'm using Portfolio A, and for the conventional, I've been using Portfolio B.
Okay. All right.
Okay, well, wait. I want to go back to what he said. So you'd be selling stocks now and then slowly buying back into the market. Is that what I heard?
Yes.
Yeah.
Okay. All right.
Okay. Can I throw one thing in really quickly?
Please.
The Brinker portfolios, the model portfolios, he always compares them with the S&P 500, which is a weak comparison. And some of those portfolios over certain time periods, like 15 years, his portfolio A and portfolio B have reacted identically. They have moved exactly the same as the S&P 500, exactly the same. So again, I come back to this. You can't effectively beat the market. You just can't do it. Brinker hasn't done it. Ken Fisher hasn't done it. Jim Cramer hasn't done it. None of these guys have ever done it. I've looked at Brinker's record over the years. I think you would be so much smarter to just move, to slide sideways over into a portfolio of real, true, broad indexes based on your risk tolerance with maybe a little bit extra thrown into small cap value. with a true international U.S. division, if it's 60-40 or 50-50, I don't care which, and do it not via dollar cost averaging, but do it all at once. Because what you have now is a portfolio that is heavily weighted in the U.S., that is heavily weighted in large cap U.S. stocks, and you cannot time the market. You cannot. Dollar cost averaging works because that's the way you earn money. But what you're doing is just trying to kind of time it. You're bailing and then slowly dribbling it back in, whereas no one expected 2020 to be as good as it has been. 2021 could be even better. Could be worse.
I guess
we don't know.
Before I did anything, and it sounds like it's too late to go back, but I would know what rate of return I need on the $850,000 for the next 30 years, build my portfolio appropriately, and forget about everything that's going on in the world, because there's always going to be lots of things happening all over the place.
Thanks for the call. 855-935-TALK is the phone number, 855-935-8255.
Tom and Don are talking real money.
Now everyone can meet the retirement of their dreams at Retire Meet America 2021 online. Sign up now for free at retiremeet.com. That's retiremeet.com.
Reality radio for a really great future. We're talking real money.
Hey, welcome back to the show. We had a little technical difficulty. A little.
We did.
Here's the problem. The internet is not as dependable as it really should be yet. After all these years, since the mid-'90s, it's still not always dependable. We find it with
can we say,
business lines.
I compare it, by the way, can we say it, because the playoffs are here? The internet is about as dependable as tackling in the National Football League. There is no such thing anymore. They sort of glance off people.
You gotta work on your analogies.
Analogies, not good. Okay.
You gotta football and internet. No, I don't get it. So anyway, we're back. 855-935-TALK is the phone number. 855-935-8255. And since we're back, Tom, I have a question that maybe you can answer. I don't know. I'm going to throw it to you because you're the one who deals with this stuff all the time. You ready? I don't know if you're paying attention.
I'm paying
You're
attention.
kind of into the football thing right now.
No, I'm paying attention.
You're into the playoff thing. While there does not seem to be a single right answer on the question of long-term health insurance, Don has indicated a preference for self-insurance, while Tom and Barb have deferred to a case-by-case approach. Of course, they punted. I am wondering whether longevity insurance might be a decent substitute or surrogate for it.
What was it?
Longevity insurance.
Longevity insurance.
Yeah, it's a new weird.
So the guarantee how many years you live?
Well, you pay for it, and the longer it's letting an insurance company invest your money, and then they'll pay a certain. They're gaming. They're playing their actuarial tables again, and they're guaranteeing to pay you a certain amount at a certain point, which is. And again, this is why I hate long-term care insurance generally, because it's a gamble that you will not likely win. You won't likely win because the insurance companies always win.
Yeah, right, exactly. By the way, it's the same, and you're going to hear a lot more about this in the coming months. Same reason I don't favor annuities inside of retirement plans. Because now there's a lot of discussion around the fact that, all you do is put this money in this annuity and you're guaranteed a certain amount of income the rest of your life. There's another side of that. There's a trade-off.
It's an annuity.
Making, right?
It's
an annuity.
Longevity insurance is just another name for an annuity.
No, I get it. Yeah, in many ways it is. So I probably would not favor that. I mean, again, it depends on what you're trying to solve for. For me, I have life insurance because I have a 12-year-old daughter.
Right. Now, that makes perfect sense because
I mean, if something happens
you want to
me,
provide for her care should something happen to you.
And my wife, of course,
and
too. But, she's pretty self-sufficient.
I was going to say, she can make pizzas like nobody's business. So
Exactly. So I can pretty well say there's a reason to have that insurance. But then once you start to veer past that, health insurance, sure, I've got health insurance because if I get sick, I'm going to need it. But car insurance, I mean, stuff like that I can say, but starts getting complicated. Forget
And
it.
again, they're playing their life expectancy tables to their advantage. 855-935-TALK.
Don are talking real money.
Our biggest event of the year, Retire Meet America 2021, is now available to everyone in the country, and it's absolutely free. Sign up now at retiremeet.com, retiremeet.com.
For your real life and real future, Tom and Don are talking real money.
Outrage.
What are you outraged about now?
Outrage that they started the Seahawk game in the middle of the most important show in Seattle.
Yeah.
And so they're going to force me to give a partial score here because people are going to want to know. Partial score.
Do you think people
is
want to know?
The Rams 0. I'm just going to give that partial score.
The Rams
That's
0.
okay.
We don't know what the
Rams 0.
Seahawks have. We do know the Rams have.
Partial
If
score.
they just
Partial
started the
score.
game, it's, I'm guessing, 0-0.
I'm not going to give any more information than that because I'm
No
outraged that they
no
started in the middle
spoiler.
of this. Exactly. Thank you.
Oh, my gosh. All right. A couple of ways to ask us questions. You can call the number, 855-935-TALK. You got me all confused. 855-935-8255. Or, even better, you can send them in at TalkingRealMoney.com. So you have a couple of ways to do it. So either way works. And if we don't get to you on the show from TalkingRealMoney.com or from 855-935-TALK, you can just get those questions all lined up for a podcast, so you need to listen to the podcast every day. That's our way of making you listen. 855-935-8255. Kathy, you're up. Welcome to Talking Real Money.
Hi, Kathy.
Hi.
Thanks for joining us.
Hello. I just had a quick question. I take part in my company's 401k plan, and that's pretty much how I've done so far my savings for retirement. But I feel like I could be more proactive. Plus, I just switched over to a new company that has less of a match. And so I did a calling around looking for a fiduciary planner just to kind of help me look at what my options, because I'm better if I have a goal, like if I plunk this much money a month in, this is what I'd be looking at. And I found someone, and they're offering to do a one-time financial plan for $1,500. And I just wondered, is that a good deal?
That's a pretty typical price for a financial plan.
That's actually a little. I mean, that's
we
I think
don't
that's
we
what
charge 15? We charge $1,500.
And
Yeah.
I think actually that's if you went,
That's
if you
low.
just walked in the door. Yeah, other people would say 3,000, 4,000. Depends on the level of difficulty, but yeah, $1,500 is very.
Now, are you, just very important question though, before you enter into this agreement, is this a firm that does not ever charge commissions?
Yes.
Good. Great.
I think you're on.
And
the
what's
right-
their
you're
what's
right
their
path.
fee structure if you decided you wanted to work with them? What do they charge per year?
I believe it's a percentage of your assets, and they have these different break points. So I think it's like 2% up to $60,000, and goes on from there.
Okay. Yeah, 2% is too high. So use them if you're going to use them for the plan. Do not use them for management. That's too high. But you could use them for the plan, surely.
And I guess if I was starting with a
Okay.
plan, here's another idea. At the beginning, I would tell them, here's what I want to, I'm solving for. Here's what I want to know. So you make sure that you get out of the plan exactly what you want, rather than them just saying, here's all a bunch of numbers. No, here's what I want to know.
Yeah,
That's what I.
That
that's
is
how I'd
actually
set it up.
really good advice.
Okay. And if I wanted to know more about how to find a better management, someone to use for management, is there a place you can go to find what more fair pricing is
Yeah.
based on your income?
Well, we actually, at TalkingRealMoney.com, we did a couple of things. I went through most of the big firms and compared their fee structures. And then I also, we believe in this scientific approach that was really popularized by dimensional funds. Now, a lot of other companies are using it now. But so what I did is I went through are you in the Seattle area?
Yes.
Okay. What I did is I went through all the firms in the Seattle area that work with dimensional funds, and then I went through their Form ADV, and I did all the research for you to find out to make sure they didn't sell insurance products, to make sure they didn't collect commissions, to make sure their fee structure was in that 1% range or so. And I've got a list of them at TalkingRealMoney.com, a list of
You
advisors.
go to TalkingRealMoney.com, and which is the picture you click on?
Well, there aren't any pictures anymore. Just go to
that's right.
TalkingRealMoney.com. I think it's /help. Hold on, let me just double check. I think that's where I left it.
And he has a list there of people that we think you can trust.
Yeah. Oh, here it is. Yeah.
That
Go to
charge fairly.
TalkingRealMoney.com /help, and it has a thing on how to interview an advisor, We research the financial professionals, check out these advisors, etc. There's a lot of good information on how to pick a fiduciary.
Okay. Thank you for your help.
You're very welcome. Thank you for your call. Appreciate it.
Thank you, Kathy.
855-935-TALK is our phone number. So it's
I'm gonna spend
talkingrealmoney.com/help.
Yeah, and I wanted to talk to Kathy about this, but I find it fascinating that the financial services industry is saying, hey, we need to go attract more women customers. And it's people like Robinhood, Charles Schwab, Fidelity. They want you to be traders.
Traders to your gender?
Well, there's that. But I'm going to talk about it next week on my podcast. So
okay.
Stay tuned for
All
that.
right.
I think it's
All right. Well, I'm looking forward to that one.
Women,
I'll be editing that one.
I'm going to say right now, women are too smart to get sucked into this.
You think?
They're just too smart. I think they are, frankly. But
so they're smarter than we are?
Pretty much.
Trader
when it comes
to your
to
gender.
This.
You're a gender trader. 855-935-TALK is our number. Trent, you're up. Welcome to the program.
Thanks for having me. I appreciate it. Question
Our pleasure.
On behalf of my mom. She's 76 years old. She has about $40,000 in a Franklin Templeton account. I believe it's FKINX. And I was looking at the expense ratio, and I think it's 0.79 or something like that, kind of high.
That sounds about right for them.
Okay. And so she's 76. She wants to just preserve her capital, maybe, but she wasn't happy losing money earlier in the year and stuff. So what would you recommend for something that, for her age?
What idiot put her in this fund? I mean, really?
The income fund?
What idiot put her in this fund? This is not a safe income fund. This is a potentially very, very volatile fund because it's half in stocks.
That's what I noticed when I looked into it, and that's exactly why I'm calling you guys. Because I have all my stuff in Vanguard's ETF and stuff. Secondly, though, what will she pay, or will she
Tom
pay
and his music stand.
taxes taking that money out?
Yes, she will.
We don't.
She will.
We'd have to know what her cost basis is for the fund.
But if she's had it for a while, there'll be some capital gains. But bear in mind, capital gains. I mean, she's not in a high tax bracket, is she?
No, she's not. She just gets Social Security and my dad's pension, but that's tax free.
Yeah, she's not. She doesn't. She does not need to worry about capital gains. Her rate is going to be so low.
Here's an easy solution.
Yeah, what's
simple solution?
Yes,
that you came up with earlier. The Vanguard Target Date Fund. Use one of the Target Date.
No,
funds.
even better.
Because
no.
If she does it because if she does it like 20, it's going to be less than half in stocks.
I know, but it's still, I think, too aggressive. You said she really hated losing money, right?
Yes.
Yeah,
she doesn't understand how it works.
Yeah, so you're right. So she is not looking at this as a way to build her future wealth. Her primary goal is to just eke out a little tiny bit of income from this, I'm guessing, and not see it fluctuate very much at all, right?
Mostly she wants it to somewhat grow. She wants to save money and have something to pass on to my brother and I.
Okay, but she doesn't. Okay, so she doesn't need anything from. But here's the problem: it's her psychology. You know, that Franklin fund in 2020 went down, lost a total of 5%, even after its dividends. So, if that made her uncomfortable, see, that's my worry. If a small little 5% drop made her uncomfortable, I think the most aggressive thing she could do and still be comfortable. And you guys can, when you inherit it later, you can take care of it. But right now, I would just keep her with something at Vanguard, one of their bond funds, even the bond index fund, because it gives her great diversification. But it's going to give her a much higher degree of longer-term protection from volatility.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
That was a perfect illustration of the problem, the investing dilemma. Everybody wants to make money. Everybody wants to make money, but nobody wants to see it go down. And you must accept losses if you want growth. And if you can't accept the losses, then you're going to have to take a lot less money. And that's one of the many topics we're going to be talking about at Retire Meet America 2021, our first national Retire Meet. Thanks to the COVID virus, it will be virtual. And the great news is we've got some terrific guests, some wonderful keynote speakers, 2 keynote speakers. The best news of all is that this event is this year totally free. It's a BYOL. You got to bring your own lunch, but it's free. So you can sit home in your pajamas, watch all the video stuff, pick out your courses. Just sign up now at retiremeet.com, retiremeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?